Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, March 23rd. It is 6:27 in the morning as I'm starting the video. And don't forget, run your player at 1.5x. Taking a quick look at futures. Oil up 2%. Gold and silver are positive. Gold about 0.5%. Silver 1.3%. Equities are down across the board, but just ticks like 0.25%. Over on the macro front, we've got multiple Fed speakers today. I have down Bullard and Daly. Of course, Bullard's your let's get this thing rolling 50 bip guy. And then I do have Powell speaking today, but it's not anticipated to be like a policy type discussion. So I don't even know if the news people will even be covering it. We got new home sales. We've got oil inventory. And just a fun fact for you, I'm sure you're familiar with that company Gas Buddy, where you can get an app and find the lowest gas in your area type thing. They came out early this week and said Sunday gasoline demand was the highest that they ever recorded. Now, that data only goes back to 2017, but given prices where they are, to report gasoline on a Sunday, highest it's ever been, I thought that was significant. So I'm sure they'll be reporting that, and I'm going to try and dial into them and follow them on Twitter or something like that when they put out this data that I would get it. Last night, Adobe reported. You may want to put that on your list. I did not see, up or down movement, but might be a good one for a setup. This morning, we've got Jinko Solar, General Mills, and Cintas. After the bell, KB Homes, and TripAdvisor. Those are the big ones that I saw. So before we get into the charts, I want to do a quick little thing for you. Remember, a week ago today was Fed Day. And the morning of the Fed Day, we were just at a period of testing those February lows. And the discussion was Fed policy, raising rates into the teeth of a slowing economy, that tech is going to have a massive headwind because rising interest rate environment is tough sledding for tech. What else do we have? The sentiment was bearish. Are we going to crash the lows and head down? And then after Powell, even though the statement itself was hawkish, the market reacted bullishly. Now, and there really hasn't been any bullish catalyst. It's just gone up and gone up significantly. So I was kind of pondering the situation. I think there's going to be a 50 basis point rate hike the next time around in early May. They may even step in early. But I was thinking to myself, besides being my mom's birthday on March 31st, what day is that? And what significance could that hold for asset managers? Well, it's the end of the quarter, right? March 31st. And we know that they want to put their best foot forward to their clients because they've got to print out the quarterly statements, right? And mail them out. So whether it was a grand plan from the beginning to rip the market into end of quarter, we'll never know that. But now that we're here, I think there's going to be a lot of big money that doesn't want this thing to fall apart before the end of the quarter. In fact, they may have an incentive to keep grinding it higher, get more bears to capitulate, and just run this thing into the end of the quarter next week on the 31st, which is a Thursday. So I've got that in the back of my mind. Another thing, one of the ways you get fired as an asset manager, well, number one, underperform your benchmarks, but number two, being caught not in the right sectors. So for instance, we know that energy and materials have been materials and commodities have been the clear winners in 2022. So do you want to be an asset manager sitting there on the 31st and having a pinprick of a position in oil, in energy, in materials, in commodities? Or do you want to be a guy that can proudly report, what are you talking about? Look at all this stuff I got in energy. Look at all these moves I've made, right? To make it look good, even though they may only have been in it for 10 days on their rebalance, they want to report that they're in the right stuff. And so what's the point of all that? What if we see a bum rush into energy? Because let's say you want to dial back your exposure to tech or Facebook or whatever names that you hold as an overweight. The energy and material sectors are so small, so tiny in comparison to, financials or communications or consumer discretionary, that relatively speaking, you've got a wall of cash that you got to get through a 6-foot gate to get into those teeny tiny sectors. And it's going to look a lot like what happened to Oxy when Warren Buffett decided he was going to accumulate, right? First, you see the strength in the chart, and then once the announcement is made, those filings come out, then you get the people that want to ride on Warren's coattails. So that's just a scenario. I mean, I lay up at night thinking of these things. I have no idea if it's going to be true, but if we've got some stuff identified and we ourselves want to be in energy and commodities and materials, blah, 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 we may stand to benefit from that, at least heading into next Thursday's quarterly expiration or close the quarter. So let's see if that plays out. And then, of course, the flip side of that is once the quarter is over, then it finds its own level. And the fact that the same basic narrative is going to hold true that was true a week ago. You got an aggressive Fed. There is no Fed put. Jay Powell is not going to rush in when we're down 10%. Certainly now, I think the higher the indexes go, the more freewheeling he can be, right? He's not going to be, if we're reaching for highs, he's not going to be worried about a 50 basis point rise. That's going to give him more latitude to be more aggressive. So this actually puts him in a stronger posture to be aggressive. So all the things that people were worried about a week ago are going to come back to the forefront as soon as that first red bar is printed. So what I plan to do is I'm going to put together a short game plan. Not short in length, but what are the things that I want to short when the rip and the Ponzi names and the bubble names and all that kind of stuff runs out of gas, or other names that are technically set up, firing into resistance on April 1st, and then be ready to go, not be a deer in the headlights. So I would suggest that you do the same, because my view is this is still, it's exceeded expectations, absolutely, but face-ripping rally within a bear market. That's what I think this is, but I am not surprised or trying to shoot at this thing now. I think the time to shoot at it is let the end of the quarter play out and then see what happens, and have some names ready to go. And if we don't get the signal, we don't go piling in short. But if we do get the signal, we want to know exactly where we're going so we can get repositioned, wind out of a bunch of longs, and then rotate into a short posture if this whole thing falls apart in early April. So let's go through the charts really quickly. I know I always say that. I know it always ends up being a 40-minute video, but gonna go quickly. TLT, wrong side of the charts. This is a weekly chart breaking this big support level that goes back multiple years. We broke through, target being down here around 124, where you've got a little bit of support, but then after that potentially all the way down to 117 and a half. Got a comment in the trading room yesterday, oh my gosh, I'm scared of NIMO and NAMO, and that these oscillators certainly are something not necessarily to be scared of, but you certainly got to give them a high degree of respect and know exactly where you're at. Right here, McClellan is at 70, so it's overbought. And I can look at NIMO real quick. I think it's a little less. Yeah, NIMO's at 58. So they're at the top of the range. The rubber band is stretched. Normally, I would be saying, as I do over here, start unwinding. What you can do is preemptively get some puts, out in time if you care to, in case my whole scenario is 100% wrong and they start reversing it before the end of the quarter. This would be the place where they started doing that, at the high end of the range of the oscillators. So you can put that in your strategy in the back of your mind, and if you find that actionable, you can certainly start to put some hedges in place. VIX continues to work its way down. I have a little uptrend line here off the recent lows. You see that we broke down here. Just look for VIX trend during the day. I think that's going to be your best kind of read on what's happening, during the day in trends if you're actively trading. SPY broke out of the wedge, came up here, took out the 200, took out the 50, and now we're back testing this 450, which is an important level. You break above that, I think you can get up into this 456 area, and make sure that you've got this gap marked on your charts. Starting at, let's see, yeah, this is actually drawn incorrectly. The gap goes from 460 to 465. This is right. So we're at an important point right here this morning. If we break above, then I think we've got pretty much an open door up to 456. So keep that location in mind. Notice that above 450, you've got a high volume bar here, but then you go into the void, and that's where you want to be long in these trade locations where there's not a lot of people on the other side trying to sell into you. That would happen more or less up here towards 456, but even then, not some scary wall of resistance, at least in my opinion. Not a lot to see here on SPY 30, the magnifying glass. What I did do is add some channel lines here for visual reference. You know, if we get rejected here at 450, I mean, it is a big level, and you drop out of this channel, you got a little gap here at 44.50. It's about, you know, a dollar wide kind of thing, $1.50 wide, not much of a gap, but you could go down there, fill that gap, and then reverse would be a potential scenario. Qs coming into some key levels yesterday. We filled this gap, and we came up to kiss the 200 EMA. I've got your Fibonacci retracements here for reference. I think you're going to get some resistance here at the 200, and then 360, and then you've got the 50% retracement level at 361.40. So those are going to be levels that you want to keep on your chart. But what I would do is over here on the 2-hour chart is, if price can get above this 359.5, 360 area, if you have been holding from lower levels, if you've been riding this the whole way, and I hope you have, this would be a great place to recalibrate. Move up your stops, move up your strikes. Make sure you get all this stuff in the safely in the bank in case of a snap reversal. You don't want to be sitting there holding the bag when a giant red bar prints for whatever reason. So I would use that level to recalibrate your position and stay long. And you can see, you know, what's going on in the 30-minute chart. You've got a zoom in here. All the levels, you'll notice, are a little bit different in the sense that, you know, this large volume bar doesn't come in exactly where it would on a 2-hour chart. But you trade the chart on the time frame that's closest to what you're doing, and use those as the references. Just remember, the higher the time frame, the more important the level. So if you were trading like on a 5-minute chart or a 15-minute chart, I would certainly be looking at the 2-hour to say where are the big levels on the 2-hour, because that's the next larger time frame up. And so you can mark those levels on your chart and be aware of them, and you won't you won't be mystified when you think you've got an open run to 365 and then you find out, yeah, but I got a big resistance level on the daily chart and on the 2-hour chart at 361, just for an example, and then you're wondering why price stopped right there. Well, it's not because you had anything particularly flagged here, but on the larger time frames, something will usually jump out for you. Moving on to IWM, testing the top of this consolidation area and working just below 210, which is resistance that goes back a year. The other day we talked about a scenario of a bull trap that would get a lot of people. What would that look like? We go up, we break back inside of 210, which is a big level. That's going to suck in a lot of bullish people, technicals. A break above the 200, that's going to be another technical event that's bullish, and then a gap fill that's bullish. But that all happens before April 1st. Get everybody long, and then pull the rug. So that would be one scenario for IWM. You can see the levels here on the 2-hour a little bit clearer. Here's where we're at, 210. Here's the gap. I don't have the 200 in on here, but you can get that level from back on the other chart. Comes in at 211.55, so right in between 210 resistance and resistance from the gap. So that's going to be a tough little area to get through for the bulls. Big resistance levels, 3 of them actually, 210, 211.50 for the 200, and then the gap entry at 212. Moving on to FATMAAN, but before I do, any new listeners to the channel, I really appreciate you being here early in the morning. I'm a firm believer that if you enter your trading day, with a plan, with an idea what you're going to focus on, with the correct levels, that puts you in the best possible scenario to have a nice winning day. And then having that majority of that pre-work laid out for you, you can focus more on your execution, and that's going to be how you get paid. If that appeals to you, hit the subscribe button, the alarm bell, leave me a comment on how it's going, something you'd like me to address. It would be my pleasure to do that. Certainly pass the link along to others in your trading group that may benefit. And then go over in the show notes. There's a link to the blog site where you can drop in your email address, register for all my content. You'll get it morning, noon, or night right to your email box. And you'll also get an invite to our trading room. We've had several new people join in the last couple days, and it's great to see them. And you can choose your own level of participation. Maybe you want to share a lot of your ideas. Maybe you just want to be a guy that looks over everyone else's shoulder to see what they're thinking. Either one is fine. We got a lot of both, so we'd love to see you. And of course, longtime listeners, thank you so much for your continued support. Facebook continues to grind higher. Got a level of support here about 215. I think you can get up here at the next level of the range, 221.50-ish, and then right on up the line. Apple, very much the same thing. I mean, stair-stepping with very limited pullbacks on a steep move higher. Back in the charts. if you care to go back and look, these red areas are areas that have proven to be good areas of support and resistance. And so if you go back in time, you'll see a lot of reactions along these lines. So now, as long as it can hold 168.50, I think the door's open to 170. If it pops 170, I think it's going to be a fast move up to 172. Then we've got a dollar band of resistance there, and then back up to the highs, 175, 176. I doubt it's going to do all that today, but given, at least in the scenario that I've laid out, a good week, if they're going to support the market, Apple has been one of the stronger names, so that is one you may want to take a look at. Tesla's been doing phenomenal. I mean, 8% yesterday. We had, I know at least one guy that got set up on some weekly, he had a call spread. He had an 880 by 1,000 that he got on Friday for next to nothing, and that's gonna pay him really, really well. So I hope you got some of this move. Right now, I think it gets a lot harder. Why? You got this big $200 trading range, and you've got all this traffic. I'm sure there were people trapped in this trading range. You can see the large volume over price bars coming out, creating that value range. So above 1,000, I think it's going to get tougher. If you've been long and you get a break above 1,000, I would certainly be reorienting myself to use 1,000 as a major pivot. Nice big round number, bottom of the prior trading range that's $200 wide. As long as it stays above, that door is open to 1,200. But once it drops below, then it isn't. So I think that's going to be a great pivot for you to use at 1,000. And if you weren't participating, I would alarm 1,000. And if you want to get involved, that's the place where I would do it. If you get a break above, you can stay long against 1,000 with a stop just below, and see if you don't get a $100 run, or potentially even a $200 run. Remember, breaking back into an old trading range, your default target is the top of the prior range, and that's up there at 1,200. Microsoft grinds away. 305 was a major breakout area from before. I think that's going to be your big pivot, 305. If you break above, you can stay long against it. You've got actually two gaps right above. It just so happens there's, just a sliver of price action in between. I think you can almost consider these one big gap from 308 to 312. You may get a hesitation, right in the middle of it, but then go ahead and fill it. But I think 305. We can look at the daily here for a second. 305 was the big level that it broke out of for this run. Here I've got the Fibonacci retracements. You can see that they come in at essentially 309 and then 317.50. So if you're on the 60-minute chart, just mark those levels on your chart just so you know where they are. that's how I would handle that one. Amazon continues to grind away. We noted the breakout, took out the 38%, recaptured all the moving averages, including the 200. Now it's right here at this 3,300 level, and we've got the 618 retracement at 33.27. I think that's going to be a good level for you. Anything above 3,300, I would be long, with the mindset that we know we had a tag of that yesterday, that 33.27 number. And if you wanted to, you could just say, just use that as your pivot if you care to, if that was concerning. But if it gets above, I think you're going to see a quick move up to 35.50, which is really remarkable. Like I said a week ago, it was, if this doesn't hold, it's literally over, but it did hold. And now, as ridiculous as this 18% measured move was when it was written or dropped in, now you get a breakout here and you move to 35.50. It's not quite mission accomplished, but pretty darn close to it. I don't think you can count on a move to 37.40, but hey, they can do whatever they want and just go level to level. Google was another one. Double bottom. We penciled in 6%. So yesterday we checked that technical box. Remember that. That's why you draw the lines. That's why we're here, to identify technical patterns that have worked in the past. What's one of them? Double bottoms with bullish divergence. Measured move is the height of the structure added on to the breakout. So height of the structure was 6%. We added that to the breakout, and lo and behold, it has been achieved. So now, looking at the daily chart, very much like Amazon, in the sense that testing that 618 retracement, you break above that at 28.16. That'll open the door up to 28.70, and then 29.25. Netflix 60-minute chart grinding higher. You've got some resistance here at 387.50 to 390. There's going to be some resistance, but then above that 400 and then 410. So that has been working as well. SMH, I think, is pretty simple. 270 is the key pivot on this chart. Above, I think you can get to 374, and then you got a gap to fill up to 280. And then looking over on the daily chart, you see the importance of this 270 line. This was a breakout from back here. We recovered the 200. We recovered the 50. Now we're above those. They should act as support. So 270 is your pivot. Should not appreciably drop below. So I think that's a really, really good number for you. And up above, I think you should be looking for 280. DocuSign, if you're still in it, I would recalibrate around 98 as your pivot, and you're looking for 107.50. Notice the void in the charts. Not a lot of technical resistance in here. If you're already long, stay long, looking for 107.50. Coop Software up almost 7% yesterday. If you can take out 106, I would recalibrate everything right there. I would hate to see you give any of this back. So if you can break above 106, you can either congratulate yourself and take it off, or you can roll higher and try to milk this thing for another week or two. I think above 106, your first target area is going to be about 117.50, and then potentially all the way up to 130. Quickly looking at ARC, outperforming. If you notice, all the bubble Ponzi names are going up the most because they were beaten down the most and probably had more short interest than most. So that's additional rocket fuel. So on ARC-F, you get above 31. I think you can take that long and look for 33.5. Genomics broke above the downtrend line. I think you've got a level here at 47 and potentially could run up towards 49 and a half. And if things go crazy, notice you got a void up above that you could actually potentially see 50, 51. Flagship fund, this is where you got Tesla. We talked about getting long against 65 with a eye on 69. That's been playing out well. I think here in the middle, you really don't have a trade. You're in the middle of no man's land. If you got to pull back into 65 and it held, I would get long there and look for 69. If you're already in it and you get to 69, then I think there's a real good chance to get towards 72, 73. You got a void in the chart, and you will have surpassed this technical resistance. I think at that point you would stay long. ARC Web, again, we were talking about this 82 area that held as support. Good place to get in. You took out 86, and now you're kind of in the middle of no man's land. If you got a back touch at 86, I would like that long. If you're already long, look to make a decision around 92 if you're going to just take it off and take profits, or roll up and stay long and look for a move towards 98. A lot of us are in Allstate insurers. They apparently love this environment of rising interest rates. Why? For all their liquid assets, they get higher returns as interest rates rise, so they accumulate a lot of extra cash flow out of that, and plus they're raising all their rates, as you know. And you know, that's one of the reasons Warren Buffett has been kicking ass. You know, he owns Geico. He just bought another insurer the other day, Allegheny. He loves these types of businesses that generate free cash flow. And so Allstate, I would stay long against 135. I was going through the insurance sector, both all the insurers, property, casualty, life insurers. They got shooters all over the place. Here's one, Prudential, that I thought looked reasonable from a technical standpoint, you know, not blown out or whatever. I think you can get long against 120. You can either, you know, grab that now at 119 or wait for 120 to be taken out. But there was a lot of good positive order flow in the name yesterday, so I like Prudential. Other ones that you can check out are Aflac, AFL. You can look at MetLife, MET. You can look at WR Berkeley, WRB. There's a lot of names in there. You can thumb through the life insurers, but you'll see a lot of strong charts. What I tried to do here on Allstate and Prudential is get a technical setup where we can get an objective entry and have a line to shoot against rather than something that is already really extended. Lastly, keep an eye on solar. If oil's going to go to 150 or 200 or wherever it goes, I think you're going to see a response in kind from solar. We know that solar has been in a year-long corrective phase, but I'm starting to see the charts perk up. Here was an interesting chart on the monthly that it made a run towards 115, came back to this 70 level, 72, made a fresh high, but then failed over the last 6-7 months. But it stopped right at that 72, a couple of undercuts, but they bought it up by the end of the month. That looks like really good monthly support down around 72, 70, something like that. If you wanted to do a long position, out in time, I think that just from a technical standpoint, it looks like 70 should be rock solid. And then you can go to the daily or weekly charts to fine tune it from there. Just one last chart for you. CSIQ weekly, solar sector. Big run up, big correction. Just broke out this week from this downtrend line. I like that one as well. But you can go look at, flip through the sector, and there's a lot of charts that are perking up. A lot of them right at starting to test the 200 from below. And like we talked about before, you get above the 200, there's going to be a lot of algos and institutional buyers that's their green light to get long. So you can alarm those levels in your platform and be ready to go. So let's wrap it up there. I hope you found the information useful. This has been Chris Buss with Traders Profit Compass. Have a good day of trading and talk to you next time.